Welcome back. You're watching Indian Open right here on Bloomberg Quint Live. A quick check across the Asian bourses, and there's a bit of green, slightly more green than what it was when we started off the show at 8 a.m. So maybe some more positive cues, but let's wait and watch. It'll be too soon to speak right now. Remember, we'll be watching out for a bunch of earnings reactions that we'll see on Open today. So that is arguably the most important point to monitor. We'll have this market start off okay, but a couple of index names like Bharti Infratel and a whole host of mid-sized names will react to the numbers today. And we'll talk about all of them with our research team huddle as well. But start off with what the derivative space is showing in terms of data points that you need to watch out for in terms of trading day today. Navneet is standing by with those details. Navneet, good morning. What are you watching out for?
Good morning, Neeraj. An important day. The monthly series expires, and it's not been a great series so far. In fact, the worst series of 2019. Just a recap, Nifty is down about closer to 5% for the series. Bank Nifty is down 7.5%, and the Nifty Mid-Cap Index is down about 10% so far for the July series. And talking about the rollovers, yesterday the Nifty rollovers stood at about 53%, a tad bit lower than the average rollovers of last 3 months, which is somewhere about 55%. For Bank Nifty, which has been underperforming, the rollovers for that one stood at about 52%. And of course, there were positions being added for the August series. In terms of India Volatility Index, that finally saw some bit of cooling off, though the markets ended lower. India VIX closed around the levels of 12.7. Looking at the options data, the Nifty PCR, the put call ratio yesterday fell below the level of 1, which is very keenly watched out by most of the traders. So that was at 0.96, could be the function of expiry week as well. What are the levels that you should watch out for in terms of open interest distribution? Maximum open interest is at the 11,400 call and the 11,300 put. And looking at the premiums on these strikes, probably we're expecting a range of about 11,200 to about 300 or 350 on the upside for today's session. But definitely it's been all about call writing in past many sessions. Even if you look at the change in open interest yesterday, there were a lot of positions added here at 11,300 call. And remember, as we moved below that mark, the put writers also ran for cover. So there was unwinding seen at the 11,300 put strike. That's about the levels. But in terms of stock futures, you had fresh long positions coming in for Asian Paints. Line by line, it was beat on all parameters in terms of numbers. Also, fresh longs was seen for Torrent Pharma after the numbers came up. The stock snapped the 5-day fall yesterday. And Jubilant FoodWorks, not good set of numbers. Disappointment coming in from SSG Growth. Fresh short positions were seen here. And Kajaria, which was one of your top F&O loser yesterday, saw some bit of a long unwinding as open interest fell here across the series. Just a quick data point on the FI front, they continue to add short positions on index futures even yesterday. So 14,500 contracts were added here, and unwinding on the long side continues. They remain net short on the index futures to the tune of 56%. Back to you, Neeraj.
Yep, thanks a lot for that, Navneet. That's the keyword. They remain net short, and not surprising on the cash side, on the future side, the short positions exist. Let's see what happens on start today. We have a bit of green on our hands. Do the markets use that, or the traders use that to create some fresh short positions? We'll get to know in a bit. But let's talk about fundamentals. Parthiv Shah, director at TRACOM Stockbrokers, joins us as usual on Thursdays. Parthiv, good having you as always. Thanks much for joining in. Cut straight to the chase. First, a brief mention of a couple of things that happened yesterday, Parthiv. The market was very disappointed when it came to some small misses in the consumption pocket, and Jubilant was a case in point yesterday. We've seen some volatility in HUL yesterday as well, though I think it ended relatively better than what people would have thought. What are you making of the noises there?
Good morning, Neeraj. If you allow me, I think not only noises about these consumption pockets, but overall in the market. I think, Neeraj, I would say unfortunately, at this juncture, most of the places what we are hearing stories about really a very big recession, a lot of negativity and huge chatter about negative talks. And these talks don't allow sound investors to try and pick up quality names in such a market scenario, where I think most of the gurus of the stock market would always say, I think best opportunities in terms of investments happen during a time when nobody wants to talk about equities. And I think I would strongly recommend all your viewers today to go through the interview of Mr. Aditya Puri, who heads India's most premium bank, and I think most respectable not only in India, globally. I think he has some very valid points in terms of where we are headed going ahead. And yes, I think there is some problem in terms of credit not being available to the person who deserves. But I think this is not going to be a forever phenomenon. Our country will have a lot of demand. The credit will start flowing back, and that's when I think we'll see things bottoming up and things again picking up. So I think talking about the consumption pockets, so I'll go part by part. Firstly, HUL. I think what we are seeing is HUL grew sales by 6%. That was aided by a 5% volume growth, which was totally in line with what one was estimating. I think certainly, I think their past commentaries did indicate they were slightly cautiously optimistic. But I think see how smart this company is. Based on some tweaks in terms of how they treat their channel partners, how they treat the ad spends, they've been able to increase the profitability by 14%, which is, I think, extremely good. They've shown that bottom line performance with cost tweaks and also a lot of raw material prices which went down. I think they were able to take advantage of it. I think, is this company going to stay at 5% volume growth from a high base of the past going ahead? Not really. Going ahead, at least by next year, we're expecting this 5% volume growth to grow year on year by anything between 8 to 10%. And that would be a very reasonable growth story going ahead. So I think it is still the bellwether. The recent price decline, I think it's a good opportunity. One might argue it's quoting at 45 times, 42 times. But I think quality companies in India, we know, I think they are rich. There will always be a scarcity premium for such companies. Now, talking about Jubilant Foods, I recollect, I think last week when we were talking about this company, I did mention the fact that let's wait for the result. Let's see what has Zomato, Swiggy's of the world done to a company like Jubilant Foods. And I think this was a quarter where I think it was coming from a very high base of 26.5% SSG growth, where I think the number came out to be 4.1%, and we saw the stock reacting excessively negatively. So I think, yes, there is a challenge. The stock is not at all cheap. And I think there is this aggregators who are taking a lot of share. And despite having the World Cup season, I think this was not a quarter which justifies the current valuation. So here I would certainly wait to see what the management does in terms of trying to mitigate this threat about these aggregators. Last talk I would like to talk about is Asian Paints. Here is a classic example of a company doing all the right things and trying to kind of fight the demand destruction that we have seen in this economy by gaining market share. So I think one might argue that Asian Paints gave a 16% sort of a volume growth number, which was, I think, unimaginable. And the only reason they were able to do it, very smart management. They have garnered unorganized market share. And either this is what is going to happen in times of the economic scenario which is right now. Smart companies will garner more market share from weaker hands, and that's where the investors need to bet on. And these Asian Paints of the world are going to stay at 40, 45 multiples. And trust me, paints is one sector where we believe over the next 5, 7, 10 years, these guys are going to grow at a double-digit volume growth on an average. So I think certainly one has to bet on such companies. Asian Paints, Berger Paints, these are the top two picks I believe one should have in the portfolio over the longer horizon.
Okay, Parthiv, stay on. Since you mentioned Asian Paints, let me go across to a huddle and try and get some views on that. Brokerages have given their verdict on what Asian Paints has done. We'll also try and talk about the other stocks in news and give you a sneak peek into what a couple of cement companies or one of the largest cement companies will do in this quarter as well. Mishika, Nikki and Sameet join in for that. We're talking about Asian Paints. Sameet, let's start off with brokerages. What brokerages have to say?
Well, most of the brokerages have hiked their target price after the company reported a stellar quarter in the first quarter of financial year 2020. Now, analysts are estimating the volume growth of Asian Paints to be in the range of around 15 to 20%. So I'll start off with Macquarie. Now, they have maintained the outperform rating on the stock and have hiked the target price to 1,530. Now, they are expecting the volume growth to be around 15% for the company, that too in a challenging environment. Now, it also says that the margins of the company were aided because of Ind AS 116 and because of lower other expenses. Now, and going forward, they're expecting Asian Paints to remain aggressive in their channel push strategy in the near future. Second one is from Bank of America Merrill Lynch. Now, they have maintained their buy rating on the stock and have hiked the target price on Asian Paints to 1,650. Now, they're expecting the volume growth to be around in the range of around 18 to 20%, which is also much ahead of their own estimates. Now, they're saying the strong earnings growth momentum for the company would continue on the back of this demand growth and benign input cost prices. Now, also it says that this strong growth that is expected from Asian Paints would support its premium valuations going forward. Lastly, CLSA, they have maintained their sell rating but have hiked the target price to 1,300 rupees. Now, they're saying that the first quarter quarter numbers were outstanding, and they're expecting the volume growth to be around 15% for the company. However, the management commentary was cautious because of the current macro environment and because of the rainfall deficit that India has been witnessing, and they are also concerned on this demand environment, and they believe that the paint category would be vulnerable, and that's the reason they have still maintained the sell rating on the stock, but they have still hiked the target price for Asian Paints to 1,300 rupees.
Okay, let's see if Asian Paint reacts in the session today, and how does it react in the session today. Sameet, thanks so much for that. Mishka, some other stocks might react as well. Good morning. What are the key stocks in focus?
Good morning, Neeraj. Lots of stocks in focus today, actually. Let's start with the important results. The first one's ICICI Prudential Life Insurance. They had a good set of numbers, mainly because of the ramp up of the protection business that drove margin expansion. The VNB grew by 27% with margins of 21% due to scaling up of its protection business, and the VNB margin is driven up by the product mix change and no negative expense impact. Now, customer diversification is also driving mix change, and the company aims to double its VNB over the next 3 to 4 years. Then we have Quest Corp. Their revenues were in line with estimates. They had a strong operational beat this quarter. Revenues were up 22%, net profits up 3.5%. EBITDA is up 44% and margins stand at 6% versus 5% last year. Their depreciation went up 94% and finance cost went up by 52%, which majorly impacted the profits. Third on the list is Shriram Transport Finance. Again, results were in line with estimates. Their net interest income was up 5%, net profit was up 11%. AUM growth was moderated, and their net interest margins saw some compression as well. Morgan Stanley says that some increase in bad loan formation, but it is still in line with seasonality. Then we have Oberoi Realty. Their results were below estimates. Revenues were down 32%. Net profit was down 51%. EBITDA was down 49%, and margins are at 39% versus 52%. Their profits were impacted majorly because their finance cost went up almost 5 times. Last results that we're looking at, IDFC First Bank, third consecutive quarterly loss driven mainly because of high provisions, which were at 75% of the total exposure. Net interest income was up 2 times. Net loss stood at 612 crores versus a net profit of 199 crores. Their GNPA stands at 2.6% versus 2.4% quarter on quarter, and NNPA stands at 1.3% versus 1.2% quarter on quarter. Now, the provision is towards 2 financial service loan accounts, and Morgan Stanley says that the asset quality pressures continue to overshadow any business positives. Now let's look at the stocks that we need to watch out for. First is Yes Bank. ICRA's downgraded long-term ratings across various programs aggregating to 32,911 crore rupees, and there are 2 defaults. Cox & Kings is defaulted on payments of commercial papers worth 174 crores, which were due on 24th July. And DHFL is defaulted on payment of non-convertible debentures worth 8 crores, which were also due on July 23rd.
Thanks, Mishika, for that. Nikki, what are you watching out for? Ambuja.
Yeah, Ambuja. ACC, just like ACC, we are not expecting much out of Ambuja, but then whether or not it will be able to deliver just like ACC did, that's another story. Top line and bottom line performance, we aren't expecting much. Top line 2.2% downtick, bottom line 20% kind of downtick that we're expecting. EBITDA performance is expected to decline by 4.5%, and margins are expected to stay stable around that 20% level. Key parameters that we like to keep an eye out will be volume figure. That's expected to remain muted, down by 4% at a number of 6.1 million ton. Essentially, this is volumes this time around for the entire quarter are not expected to show up in any of the company's earnings. It's however the realization which are expected to show in terms of the unitary operational performance of the company. Realization of the company is expected to see a 2% to 2 to 3 odd percent kind of uptick on account of the pricing power that we've seen both in North as well as West region. And apart from that, EBITDA per ton, that's expected to stay flattish around that $975 per ton. Cost realization along with that higher cost optimization along with higher realization is expected to offset any kind of negative balance balance that we would otherwise see coming in from the muted volume growth which is reported by the company, and also other income is expected to see any downtick, which in turn may have a bearing on the bottom line performance of the company. So net we're expecting a flattish sort of number, at least on top line and operational front, coming in from Ambuja.
Thanks a lot, all three of you, for giving us those updates. Parthiv, from amongst the results that came out post-market hours yesterday, Shriram Transport Finance, what do you expect the stock to do? Because the street feared a lot worse. I don't think it's come as bad. A clutch of shorts piled in the system.
See, yes, Neeraj, no two ways about it. This is a company which is having a niche business model of used trucking finances, and I think they have so far done a fantastic job in an industry where not much of a competition has been able to penetrate, except for likes of, say, Cholamandalam, but which is a very small part of their business. And the quarter was reasonably good. But Neeraj, very frankly, I think in this current scenario where I think still the spreads of AA and AAA rated paper over the current cost of funds is so high, I think it's going to be extremely challenging for companies like Shriram Transport Finance, where I think a lot of banks are also very wary to lend into such sensitive sectors. So I think my concern going ahead is not only I think how the demand for even the used CV segment will stay, but more importantly how well they'll be able to manage their NIMs. So I think there is a possibility that this company might not get derated, it might time correct. So I think it's better to avoid this particular company which is betting on one sector more than heavily. So I think I would like to avoid this company at this juncture.
Okay, avoid the company at this juncture. I will ask my technical experts and F&O experts if indeed, if there is a small bounce, how would they trade Shriram Transport Finance? Sameet Chavan, Chief Analyst for Technical and Derivatives at Angel Broking, with us on the show. Abhijit, Phatak, Director at Definedge Solutions, also joining in. Sameet, just before we get to the index though, we are talking about Shriram Transport Finance, a stock in which there are multiple shorts existing. The number is not as bad as maybe the street feared. If there is a bounce today, do you reckon the stock could get propelled higher because of the quantum of shorts in the system?
See, can't say. If you see, the overall structure has been distorted, and day before yesterday, we had a short call. Yes, our initial target was somewhere around 960, which has already been made. In fact, stock, slipped well below that important level. So, in case today, if we get a decent bounce, or probably for next couple of days, if we see any decent bounce, then again 980, 1000 is likely to act as a supply zone. So, any bounce back from current level would be an exit opportunity for this particular stock.
Okay, so any bounce and exit opportunity according to Sameet Chavan, and Parthiv too wanting to avoid Shriram Transport Finance currently. Let's talk about what the index is likely to do. Abhijit, let's start off with you. What do you expect the index to do today? We might start off maybe 10-15 points in the green.
Yeah, good morning, Neeraj. I expect a bottom somewhere very nearby, maybe worst case 11,150. Actually, 11,200 on the spot is a very good support. So any dip, I would advise a buy now with a stop loss below 11,150. Of course, today is expiry, so I don't expect expiry to be very higher, maybe not even more than 11,350. But once it crosses and closes above 11,300, that will be a first sign of bullishness. The second resistance will be 11,450. But if this bounces from 11,200 in the next couple of weeks, I expect 11,600.
Okay, so you're playing for a bounce, if not immediately, then in the near term. Abhijit, would you use call options for the month of August to play this?
Yes. On any dip, 11,600 call, I think, which was near 50, 55 yesterday, that can be a small bet with a good risk-reward ratio, because that can go towards 100 or maybe even higher. So 11,600 call of August on any dip.
Okay, so keep that at the back of your mind. Sameet, are you as sanguine too? Near-term bounce possible, or are you bearish?
See, it is possible considering the fact, we have already come off nearly 400 points in such a short span. But as of now, we don't see any, trend reversal as such. If Nifty has to gain any kind of strength, it has to first surpass and sustain beyond 11,550, 11,600. Till then, any bounce back is likely to get sold in. And the kind of sell-off that we have seen over the past few days, yes, it is a bit scary. But as of now, we believe that 11,200 to 11,100 is likely to act as a support, and on the higher side, 11,350, 11,400 remain to be a very strong resistance. So as of now, if we have to play within this range, probably will go long around the lower end, that is 11,200, 11,150, and probably again we would exit our long somewhere around 11,350, 11,400.
Okay, before we get to stock ideas from our experts, it's time for our special segment Bloomberg Edge, wherein Yash Upadhyaya tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Yash, what's the stock on your radar today?
Morning, Neeraj. So we're looking at Divi's lab, and there is certain indicators which are indicating that there could be further weakness in the counter. We're using in particular the MACD indicator as well as the RSI on the weekly time frame. But I'll start first with explaining what the MACD indicator is and how do you interpret it. The MACD is basically a trend following indicator, and it basically shows you the relationship between the two moving averages. How do you interpret it? You go short when the MACD line crosses below the signal line, and you go long when the MACD line crosses above the signal line from below. And now coming back to the price chart, what's important to note over here in the lower panel is that the blue line, which is the MACD line, that has given a negative crossover. So the blue line has crossed below the signal line, which is the white line, to give that negative crossover. Also, as far as the price action is concerned, there has been weakness in Divi's lab for the last few trading sessions. In fact, even yesterday it was down another 1%, and for this week as well, it has been trading on the lower side. Now, if we could move towards the longer time frame chart on the weekly time frame, the stock is on track to post its first weekly loss in over a month. So it is going to snap its 5-week gaining streak. And if you draw a retracement from its peak of about 1800, close to about 1800, it had formed a double top over there. The 61.8% retracement comes to the mark of the high of its previous week's candle. It did not manage to sustain above those marks, which is around the mark of 1650 or so, and then we have seen a rounding top sort of a formation, and on the lower side one could look for targets of close to 1500 as well, which is where the last time it came down to. The RSI in the lower panel as well on the weekly time frame has been forming lower highs, so that is an indication that there is weakness, and that at higher levels there has been a significant amount of selling coming into the counter.
Okay. Yash, thanks so much for putting that into perspective. Do watch out for Divi's lab in the session. What about specific stock ideas from our experts? Abhijit, I'll come to you first.
Sorry, I didn't get your question.
The stock recommendations for the day today.
Yeah,
Abhijit.
sorry. I'm bullish on two stocks. One is Larsen & Toubro, which bucked the trend, so to speak, after the results yesterday. Larsen & Toubro can be bought near 1380-85 with the stop loss below 1370. Of course, today is expiry, so it can be volatile, but over the next 1 week, I expect it to go towards 1410, 1430. And SBI has been selling off from 370 and all the way to 340. It has a good support near 330, 335. So on any dip, it can be bought near 335, 338 with the stop loss below 333 for maybe a rally back to 340, 345 and 350.
Okay, so those are a couple of ideas from Abhijit Phatak. Sameet, what about you? Your ideas for the day?
Yes, the stock specific, you could see some rebounds in today's session. So SBI is the one stock that I also believe that it has come off quite sharply, reached its major support level of 335, and yesterday toward the fag end of the day we saw some kind of buying interest from lower level. So at least for another 3 to 4% we expect a trading bounce in this counter. One can go long with the stop loss of 335, and we would expect the stock rebounding towards 348, 350. Our other call would be a short call on Havells. This stock has been consolidating of late around its important support level of 200-day moving average placed around 705, 710. Yesterday we saw decisive breakdown from this multiple support zone, and hence we expect continuation of this downward move. Target 680. It can be sold with stop loss of 707.
Okay, some other strong numbers that have come out. ICICI Pru Life Insurance, I thought, dished out a very decent quarter. The ramp up of the protection business drove margin expansion. The stock is nowhere rallied as much as an HDFC Life or maybe even an SBI Life. Parthiv, what did you make of the numbers, and does it provide a good bang for the buck simply because of the underperformance compared to the peers?
Certainly, I think, Neeraj, the underperformance and more importantly, the current valuations in terms of the price to embedded value is at a huge discount to HDFC Life and also at a reasonable discount to SBI Life. No two ways about it. If I were to compare all the three results, I think HDFC Life was standout, I think, poles apart as compared to both these guys. I mean, no two ways about it. It certainly deserves this high valuation multiple, and it will always stay like that based on how the trajectory is going ahead. So likes of ICICI Prudential Life, I think they still have a long way to go in terms of trying to improve their VNB margins to levels of upwards of 22%. So I think it's going to happen because eventually they're all focusing on the protection side of business. I think the protection business is not very soon cannibalized because everyone is focusing on it. Still, there's a lot of room for it to grow. And I think as and when that share goes up, even ICICI Prudential Life's numbers would certainly improve. So if one is already owning a quality name like that of HDFC Life, I think we are very bullish on this industry over the next 5 years. And these are, I think, prominent private sector players who have their bank channels to grow with. And ICICI Prudential Life certainly will scale up from here. So I think these levels and valuations are very attractive. And going ahead, as and when the results improve the way they're shown in this last quarter, I'm sure the price to embedded value multiple will certainly go up.
Okay. Parthiv, the other one which has been a bit of a disappointment is IDFC First Bank. Now, somehow, even if Capital First book may be doing okay, the larger IDFC book is facing issues. I know a lot of people have said that this is the stock to buy on for the next 4 or 5 years. And these calls have been coming in for the last 4 quarters. Somehow it's not done anything. For somebody who has IDFC First Bank, would you recommend a switch? Because this also has been a very disappointing quarter.
Absolutely, Neeraj, no two ways about it. And I think Mr. Vaidyanathan in his last quarter, when he had this higher provisioning, he did mention about these 3 housing finance company accounts. And I think the rumor mongering in the street is it's known names. It is the legacy issue that they inherit from the ADAG group and DHFL group. And I think the provisioning coverage ratio for these tainted assets that they own, I think is almost to the tune of now 75%. This was not a quarter when one had expected, or most of the analysts had not penciled in again an elevated provisioning level. So I think despite all the other positives, for example, the CASA has inched up a lot, which is very positive, healthy. The retail side of the book has grown, which is giving visibility about the future profitability. The core NI income has done reasonably well in the current scheme of things. I think all of that positive gets written off from this particular negative. And again, I think today probably Mr. Vaidyanathan is going to be on most of the channels, including yours, where he will again have to justify why he had to do this. And if at all, there is now needed some sort of trust deficit in some of the banks, where I think what the management talks about in the next quarter, I think then again there is a elevated provisioning. So I think it'll be important to understand how much of confidence does he have in terms of these assets being returned back. Because eventually, if that is going to happen, even with a haircut, they've taken most of the hit, and whenever that happens, probably we'll see the sentiment totally change. So IDFC Bank, I can say it has a part of a very good business, and it has this legacy issues. So we are still bullish on it, and I think we still would like to give 4 to 5 years to this story, and we still have a lot of confidence on Mr. Vaidyanathan and his ability to take this bank ahead. It's quoting at 0.9 price to book multiple. If the legacy issues are cured in the next 6 months, 12 months, I think probably we'll see a massive re-rating happening in this.
Well, let's wait and watch if that happens. 9:40 is when you hear the management, as Parthiv said, on our platform as well. Okay, 40 seconds left. Devina joins in as well. And Devina, I think all eyes will be on what some of these banks do, because if DCB and RBL is any indication, or M&M Financial is any indication, the market is not liking disappointments, and IDFC Bank has done just that, disappointed.
Yeah. And that would probably, most likely, even if the markets start positive, which the indication is that there is going to be a slightly more positive open in light of what SGX is doing, that stock could be bearing the brunt of the sell-off. So 14 seconds left to go for market pre-open. SGX Nifty pointing towards a slightly stronger start, but that can fizzle out at any point. Remember, we've really charted our own course over the last few days. SGX Nifty at 11,291 currently, and that's the market pre-open for you on your screens. Nifty 50 opens with a negative bias of about 1/3%, flat for the Sensex, and that's just going to be a little bit more volatile. Remember, today is the expiry day, the monthly expiry too. So through the day, you're going to witness some bouts of volatility. Individual stocks and how they're moving this morning. So you're still seeing a few of these names with big cuts, but that again will cool off and come off once we have the final pre-open ticks. But Yes Bank is showing a 10% cut, Airtel is showing a 10% cut, so these are not natural ticks for all of these counters. Vedanta though is down about 2.5%, Eicher Motors is down 2.3%, GAIL has looked weak, Z is down 1%, but it's still at about 375, which is a really good pickup from where it was just a few weeks back, about 326, 330, and then from there to about 375. Britannia, Tata Motors down, Kotak Mahindra Bank, Hero MotoCorp down, HCL Tech down 0.5%. Amongst the gainers, Bharti Infratel is doing okay for itself, so that one's up about 2% on the back numbers. Coal India, M&M has picked up finally. You've got some bit of a respite there. Reliance Industries 1.5% inching towards 1300. Wipro TCS, so IT is a pocket. Again, a defensive pack, a safer haven investment in a volatile falling market. Tata Steel is up about 1% and Sun Pharma does well about 1%. 69 on the rupee to the dollar.
IDFC First Bank, Shriram Transport Finance, Oberoi Realty. 3 names that I want to mark. IDFC First Bank, I don't know if it's a 10% downtick really when the market starts, but I wouldn't be surprised with any number there, frankly. The quarter has been a washout. Shriram Transport Finance, I wouldn't be surprised if it starts off positively because the numbers may be a tad lower but largely in line with estimates, and there are shorts in the system, so maybe, just maybe, there could be a bit of a bounce move out here. Watching out for Oberoi Realty, Ind AS accounting related issues on the reported numbers. Let's see how the market takes them. For now, may start, at least showing that there could be a downtick. Let's wait and watch. And lastly, Jubilant FoodWorks. The EPS cuts that have come in are very strong. The stock corrected yesterday. May not be surprising to see a further downtick here simply because the earnings downgrade that has come in has been anywhere between 13 to 15%. The stock has corrected about 7-8% already. 15% EPS downgrade. I'm not saying there should be a like-to-like downtick. Maybe there could be more as well. But don't be surprised with whatever move Jubilant FoodWorks makes in the session today. An 8% downtick yesterday doesn't mean that the stock can't fall today. Lastly, M&M Financial. Big red day today, yesterday, but the con call was a lot more optimistic. Maybe M&M Financial starts off positively. We'll get to know about that very, very shortly. Actually, since we're talking about stocks that, by the way, the bond yield should come up on your screen. Now we know that there is a single tranche $10 billion offering in the month of October in the sovereign gold bond issuance. Not that there's an immediate reaction on the yields. For now, very, very placid. But, since we were talking about stocks that could react positively or negatively, and we've spoken about a bunch of these. Jubilant FoodWorks on the trades front is also very, very interesting to monitor simply because of the kind of cut that we had yesterday. But Devina, the fact that the same-store sales growth numbers have looked so wobbly despite the index-led margin uptick doesn't mean anything because the same-store sales growth numbers have looked a bit worrying, and the trend on the SSG has just been one way, and that is down from 24% or something.
That was the single most important number yesterday. Yes, so while the numbers came trickling in towards the last 1 hour of trade, you saw the revenue numbers, you saw the margin figures, you saw the profit numbers. The stock actually didn't do a whole lot much. You saw it fall, but then it started to come up. But the moment the SSG number hit the screen, that's the time that the big washout happened, and the volumes just went through the roof as the stock tumbled about 8.5% in yesterday's session. And today's trade too, once the market opens and the early morning trades settle in, you'll actually start to see whether or not there is some more selling that comes in. Though right now the suggestion is that it's going to probably see a flattish to slightly positive bias at open. But I don't know if you've discussed the trade with our technical experts, but this one, Parthiv, I just want your opinion on whether or not from levels of about 25%, 26% of same-store sales growth to 4% now. While some would say that was the high base effect that kicked in, it still is a big, big drop. And to cover that gap up now is going to be a struggle.
Even at the risk of repeating, I think in one of our last discussions, we did talk about how the Zomato and Swiggies of the world are cannibalizing on some sort of and putting a lot of pressure on Domino's in terms of the sales. And this was a quarter where I think otherwise the SSG, despite the high base, wouldn't have been so low because it was a quarter where we know it was a World Cup session, and I think generally sales are skyrocketing there. But we did see, in a slightly tepid consumer spend environment, we did see the preference going onto these food aggregators where there were lots of deals available, lots of exciting games available where they could participate and get additional cashback, etc. of the world. So I think this particular conference call is going to be very, very important, where I think how this challenge will get mitigated, and they did add new stores, no two ways about it. But I think, yes, you rightly mentioned the SSG number. When it came out 4.1%, we saw more tepidness in the stock. And this stock by no means is cheap. There is this company where I think they are also expanding into the new Chinese food division, which might take toll on its margins slightly going ahead. So I think we are slightly cautious. We would still like to hear the commentary in terms of how they are able to mitigate this challenge and how much of pressure, if at all, they were to also enter the price war and give more further discounting to increase the SSGs, how will it impact the margin? So I think not all is looking great after this quarter. So certainly I think I have a very cautious view on Jubilant Food at this juncture.
All right, definitely not cheap, and the last 4 quarters attracted a multiple of about 50 times plus. Now FY20 40 times, but maybe looking at the tepidness of the same store sales growth, it could probably still look slightly expensive even at these levels. Oberoi Realty, this one in an environment where the rest of the real estate basket did not do a whole lot much. Actually, the last few quarters on a consistent basis, Oberoi Realty has actually surprised the street on the positive side. There are some adjustments with regards to NDS, but aside from that, the quarter itself has not managed to excite the street. 526, it had stabilized. What would you do now, Sameet, Chavan, with an Oberoi Realty?
See, this stock has been consolidating since last 3 weeks, and 540, 535 has been acting as a support. So in case if we slide below that, the stock can fall towards its 200 moving average, which is placed in the zone of 500, 490. So on the low side, 535 is the level to watch out for, and on the higher side, if this stock has to regain any kind of strength, it has to surpass and sustain beyond 575.
Okay, I just want a quick word on SpiceJet to 143. I think around thereabouts was what the trade was for SpiceJet in yesterday's session. I don't know what that's doing right now, so it's 145 now. But this one has really gone head on with capitalizing on the space and the dispute that's been happening with Interglobe.
Yeah, but there's news today, right? And that news might be interesting, Devina. What if the orders for the planes, because of the issues at Boeing, don't come about? They might get that penalty clause on one number, and that might help. But the expansion plan that it had to capture on the space vacated might actually hit a bit of a roadblock, because there might not be any planes that SpiceJet envisaged would come at a particular point of time. There's a bit of news out there. I don't quite know how to dissect it, but it's important nevertheless. And in light of what Interglobe Aviation did yesterday as a stock, because of that media houses reporting that the promoter dispute is resolved, it puts SpiceJet in a very interesting pocket right now.
Yeah, and should one trade it then, Sameet?
See, this stock has already given decent recovery in last couple of weeks from the levels of 120. So risk reward will not be favorable, considering the fact the V-shaped recovery from low levels, and it is now heading towards its major resistance zone of 154, 155. So if this stock has to kick in a fresh leg of the rally, this stock needs to surpass 154, 155, which has been acting as a sturdy wall in the recent past. So in case if the stock moves towards 154, 155, one should better lighten up the positions.
What's your understanding, Parthiv, of this whole situation within the aviation pocket?
See, I think very interesting turn in Interglobe Aviation. I think it's really funny, I think, how the development took place. First, there was a talk about the fight. Then there was a lot of discussion amongst the analysts that, how would the two promoters owning so much of stake would want to destroy their own value and fight to an extent where they are not in a position to take strategic decisions in terms of expansion of international routes. And now we hear about the resolution. So I think things have calmed out, and certainly Interglobe Aviation is the most preferred bet. You see the result, I think extraordinary results in terms of all parameters that one would look at for the aviation sector. And in terms of revenue per average seat kilometer, cost per average seat kilometer, the yields, I think extraordinary numbers. And I think this is a company which is well positioned to, though they lost like 200 basis point market share, but still at 48%. And whenever the passenger growth comes back to the glory days of 20-22%, which grew at slightly more tepid pace, I think again this company will capture a lot of yields. So we are bullish on Interglobe Aviation, and certainly I think the stock has rallied from the lows, but this is a long-term bet, certainly.
Okay, a minute away from Market Open. Let's tell you all that you need to know to stay ahead in trade today. First up, rating agency ICRA downgrades Yes Bank's long-term credit rating, citing increased stress on loan book and weak capital position. The stock marginally off in the session.
IDFC First Bank reports net loss of over 600 crores as provisions double on a sequential basis.
In other earnings, Oberoi Realty reports a weak quarter, but strong show from ICICI Prudential as well as Quest Corp. ICICI Prudential likely to start off positively today.
Tata Motors woes are unlikely to end anytime soon. The company's net loss may have expanded in the June quarter.
Lastly, Bajaj Finance is likely to continue its strong run in the June quarter. Low cost of funds and a healthy AUM growth will be the key catalyst. We'll watch out for Tata Motors as well. Actually, Bajaj Finance is the interesting one. Abhijit, Phatak, you tracked this one. How is it looking on the charts? The last few days has come off. The bounce that you expect in the markets, would you use that theory for Bajaj Finance as well?
Yes, only problem is the speed with which it has come down. It might be a bit unlikely that it will go up fast. So that is not something I expect. But it has a very good support near 2900, 3000, from where I expect it to give a rally. But how fast and how soon, that is something is difficult to say. So I would prefer to buy stocks which have shown some sign of going up rather than stocks which have come down fast.
What about Eicher Motors, Sameet, Chavan? The stock has just consistently fallen. What does one do now?
See, not only this, the entire auto space has been falling since last 8 to 10 months, and there has been no respite. As far as Eicher Motors is concerned, it has breached its major support level of 18,100 last month, and this month we have already seen a nosedive in this counter. So this stock can, continue this downward trajectory, wherein this stock can head towards its next support, which is a crucial support zone on monthly as well as quarterly charts. So that is somewhere around 15,200, 15,000. So these are the important levels to watch out for.
Okay, quickly, Parthiv, L&T and the commentary from the management with regards to capex spending, and that could likely take some more time and therefore affecting the overall recovery within the space as a whole. L&T, though, they've not changed their guidance. They still maintain their revenue and order book guidance, but just the fact that the commentary is starting to look slightly bleak.
Yes, certainly, I think a couple of negatives. One was the slightly stretched net working capital cycle, which is where I think the management was constantly guiding on last few quarters that that's where they're trying to improve this company on and trying to even increase the ROIs. But certainly, I think very, very tough times. We know, I think circulation of money is a very big problem in this current state of economy. So that's where the challenge is. Even the order book, I think they are still banking upon a lot of orders coming from government spend, which has been delayed. So that's also where the challenge is. I think the only silver lining is from the services business, where they're doing reasonably well. But I think certainly it will be a challenging time. Next 6 months, the stock might not land up doing anything unless and until we see visible change in terms of the ground level, in terms of the capex spend in the infrastructure projects.
Right, Parthiv, pleasure chatting with you this morning. Thank you so very much for joining in. All right, just under a minute left to go for market opening, so we'll quickly get into stop trading ideas from our technical experts as well. Sameet, let's start off with you.
See, I'll go with SBI. It is poised for some kind of relief move. 348, 350 are targets, and 335 would be the stop loss level.
All right, Abhijit, what about you?
Yeah, same. SBI for a target of 350 in the next few days, and L&T for a target of 1410, 1430 in the maybe a week or so.
Okay, I just want to quickly, Sameet, ask you about L&T under 1400 quickly.
See, consolidating around its 200-day moving average. If it has to regain any strength, stock needs to surpass 1425, 1430.
Okay, 12 seconds left for the markets to kickstart trade. Abhijit, Sameet, just stay on. We'll take in opening thoughts from you. But here's how the markets are starting off. We'll start off marginally in the green. The question is, can we hold on to, because the last few days we've not done that. For now, starting off marginally flattish in trade. Well, we won't be disappointed with this because last few days we haven't had green on the screen. So for now, holding out. Let's see if this continues. The mid caps and the small caps, just about 0.2% for the large caps. Remember, the mid caps are flat. The small cap index is flat. So hardly any moves there. On the broader end of the spectrum, the Nifty Bank 2 is just about flat. Hardly any move, 0.1%. But more green than red on the Nifty 50 at least. There are about 15 stocks correcting and 35 stocks advancing. Bharti Infratel 2% higher on the back of the numbers and the positives in the numbers really. The reported numbers were a bit weak, but there are some positives in tenancies. Indiabulls Housing Finance is moving up. Yesterday too it was higher. IndusInd Bank is moving up 1%. Bajaj Finance up 1%. Bajaj Finserv up 1%. So ahead of the numbers, both of those stocks are doing okay. Tata Steel and Cipla too about 0.5%. So the start not too bad. Let's wait and watch if this holds out. What is not doing well? Tech Mahindra down about 2.5%. Asian Paints about 0.75%. IOC about 0.5%. So those are a couple of names that are not doing all that well, but nothing too dramatic. Asian Paints reacting. The numbers were good, but maybe the valuations were a bit steep, and which is why the stock is correcting a little bit in the session today. So those are a few stocks that you need to monitor. Very quickly, a couple of pockets that I want to highlight at the broader end of the spectrum. Some result reactions, some stocks in focus that you need to monitor today. So firstly, strong results from ICICI Pru up 2.5%. PI Industries up 3%. Questcorp, the reported numbers were strong. Maybe it's not quite in favor these days. Questcorp starting off about a couple of percentage points lower. Stocks which should be in focus: Jubilant FoodWorks, Shriram Transport, M&M Financial. What are they doing? Shriram Transport, as we said, 6.5%. This is a short covering a lead bounce. I'm not surprised with this. Doesn't mean it will last. Doesn't mean it will go up further. Don't quite know that. But not surprised with this move because the numbers were largely in line. Not as bad. But M&M Financial, despite the positive commentary in the con call, not quite doing all that well. Another 1.5% lost. Levina, what are you spotting?
Oberoi Realty for one. Let's start off with that. Profits dipped more than 50% in the stock, and pre-open itself was down. Starting off slightly lower, I think Oberoi Realty is the one that I'm talking about. Disappointing set of numbers, and a big 5.5% cut is what you've got on the stock. We've spoken about ICICI Pru with our guests, but not a bad quarter. New business was up about 26.6%. The stock's up about 3% odd. Syndicate Bank net loss came in at about 980 odd crores. The stocks opened low by about 2.5% odd. And I think Neeraj already highlighted IDFC First Bank, but there is another one, Intellect Design Arena, Syngene International, a whole host of earnings that came out. Intellect Design 11.5% lower. Net profit was down 92%, even though there was another item of other income of about 10 odd crores. Margins were at 2.3% versus about 11.2%. That's Syngene for you, which is also looking lower by 4% on the back of its results, even though net profits came up marginally by about 8 odd%. But quick opening thoughts, and then we get you some other market opinion from both our technical experts. I'll come to you, Sameet. Today is going to be important. It's the expiry day, and the last half an hour is going to be important. Ahead of that, any other trades that you would like to initiate, aside from the ones that we've discussed, that may or may not be related to just today?
Yes, clearly index is not doing anything. 11,300, 11,320 would be the levels to watch out for, in the initial hour. But as far as stock idea is concerned, Sun TV certainly looks good, and since last 3-4 days, we have been witnessing buying happening at low levels, somewhere around 455, 460, and yesterday also stock managed to close around its highest point of the day, and today in the initial trade it is showing some sign of strength. So Sun TV looks good from here on. I would rather expect the stock heading towards 488, 490. It can be bought at current level also. Keep a stop loss around 466.
Abhijit, Phatak?
Yeah, one stock which is catching my attention right now is Reliance. It came off sharply from the opening. Now it's near 1250. It has a 200-day moving average support near 1220, 1225. So not for an immediate uptick, but maybe over the next couple of weeks it can be expected to go towards 1300 at least. So Reliance can be bought on this decline. Okay, gentlemen, thanks so much for joining in and giving us your perspectives. Really appreciate your time.
Get in Harsha Upadhyaya, Chief Investment Officer for Equity at Kotak Mahindra IMC, joins us on the show. Harsha, good morning. Thanks much for joining in. Well, DIs may have been the saving grace this last month, Harsha, because the selling spree that the FIs seem to be on is very rampant. The question, though, is, Harsha, that while the SIP model might be okay, if you were given a choice, looking at the way the economic conditions are and the commentary from the large cap names now about consumption stroke economic factors, is it prudent to maybe sit on some bit of cash in your portfolios if the mandate allows you?
Good morning, Neeraj. Yes, what you have been saying is true. The sentiments have been very weak. Foreign investors have sold close to $1.5 billion this month. And the commentary that is coming from company managements have also been pointing to further weakness in the economy. Having said this, clearly this is a time where you should not be looking at what can be the short-term returns, but you need to build a portfolio for a longer term. And as long as valuations are in your favor and if you're not taking too much risk at this point of time, that should work for you. And that's what has been our strategy. Yes, the cash levels may have gone up a couple of percentage points in some of the funds where we have seen some inflows. But broadly, our mandate is to be invested at all points of time. So to that extent, in every market condition, we'll look for companies which, in our opinion, will be better than the rest of the market. And that's what pushes us into kind of stocks or sectors that we are looking at this point of time.
So there's no need really to actually go ahead and increase cash holdings at this point. There is still opportunities of interest, Harsha?
As a policy, we don't take too much of cash calls in our portfolio because we believe that once the investor has put his money into equity funds of ours, the mandate is to invest in equity and we should not further do asset allocation with that money. With that in mind, all our funds have a maximum cash limit of 7.5%. And in some of the funds where we have been getting consistent flows, the cash levels today would be somewhere between 5 to 7%. In the rest of the funds, it could be somewhere around 2 to 3%. So that's what the cash levels are at this point of time.
Not specific to your fund, what I wanted to gauge from you is, for a retail investor at this point who's finding it difficult to maneuver this market, will it be more prudent to have cash conservation instead of cash destruction by just investing in any of the other stocks which don't seem to have a bottom currently?
It's always very difficult to time the markets. So whether it is retail investors or experts, nobody is able to really time the markets at inflection points. And we believe that if you look at the broader markets today, the valuations have been lower than the average valuations for last 10 years. Yes, the large caps maybe are still at a higher valuation than the long-term average, but broadly market has corrected nicely over the last 18 months. So to that extent, I don't think one should be panicking when the markets are showing weakness at this point of time. Over the next 6 to 9 months would be the time period to really get invested into the market with a investment horizon of maybe 3 to 5 years. So we are advising investors to do staggered and disciplined investments over the next few quarters and also keep some gunpowder dry so that if there is any additional volatility that you see in the market because of any event, then you could invest whatever you have kept aside. So that's what we are proposing at this point of time.
Harsha, anything that surprised you so far within this earnings season in terms of any management commentaries, any results that came out from specific sectors? I mean, we've seen consumption, while much of the negative commentary was already spoken about in the previous few quarters. This quarter, actually, with regards to, just setting aside a few that just came out yesterday, I don't want you to get stock specific, but do you think that most of the companies have pretty much performed in line with what the expectation was?
Most of the results have been in line or slightly lower than expectations. So to that extent, this ongoing earnings season has not really given any positive triggers for the market. And that's what has kind of increased nervousness in the market because one, the headline earnings growth that the market is expecting is very high, which is at about 25-26% year-on-year growth. And bulk of that is going to come from corporate banks where we do not really see a reason to believe that there can be disappointments at this point of time. But what is worrying to us is the consumption sector accounts for nearly 10 to 15% of the incremental growth that everyone is expecting for the financial year 2020. And that's where I think most of the disappointments would be coming through. And that's what is kind of putting further pressure on some of the consumer-driven sectors at this point of time. But by and large, there have been no real positive surprises during the season.
All right, so does that growth number of 25% get challenged now? I mean, the start, we've not gone off to a really flying start in terms of the earnings season. So, you know, with each quarter that proves to be a disappointment, that adds more pressure to the upcoming quarters for delivery and performance. So keeping that in mind, does that challenge that figure of about 25-26% growth?
Yes, in our opinion, the earnings growth for the year could be at best 17-18%, and that too led by corporate banks, which in our opinion would contribute to nearly 55 to 60% of the incremental growth during the year. If you strip that out, then overall earnings growth could be in the region of 5 to 7%, and that's what is not giving much confidence to most investors, because if you strip out the reversal that's happening in terms of provisioning levels for corporate banks, then the overall market is not really showing any different growth than what it had seen in the last couple of years. And also the pockets where there was higher growth in the past are all suffering today, and that's where the market is.
Harsha, actually the follow-up to that, while there is a quest for identifying which would be the small bank that could become larger, and therefore we need to follow up on that, this quarter has shown that that exercise might prove futile, because nobody quite anticipated high quality managements and high quality banks like DCB or RBL Bank to do what they have done. Today's numbers from IDFC First Bank are also a washout. You may buy into a stock, watch it rise for 2 quarters, 3 quarters, and then one bad day can wipe out that entire piece, and not because of the bank's individual issues, but because of the system-wide issues. Is it prudent to stick to larger names right now as opposed to try and go out searching for that mid-cap banking name?
Without getting into stock-specific concerns or issues, I would say that when economy is going through a downward trend, there will be bullets flying all over and all around, and that's what is happening with some of the banks where there has been an exposure to companies which are kind of at a distressed state today. And that doesn't mean that all small banks or mid-sized banks are bad, and also it doesn't say that all large-sized banks are good, because the issues would be dependent on what kind of loans that they have lent, and which are the companies, which are the sectors, where is the downward pressure from the economy in that sense. So our call on the banks would be that we would continue to stick to the private sector banks, where we believe that while there have been issues in a couple of cases, but overall the underwriting standards are much better than the public sector banks, and past asset quality issues are also not as high as what you would see in public sector banks. And similarly, in the NBFC space, we have been underweight, and that call continues even going forward, because we are not really seeing any normalization in that particular basket.
Harsha, the other pocket is cement. Now, Ambuja, I'm not asking for a stock-specific question again. Ambuja comes out in numbers today. If ACC's numbers are any indication, the pricing power still exists with the cement companies, even if volumes are not shaping up. So costs coming off, pricing staying okay, would that compensate for low volume growth, and would valuations give investors a chance to make money in this pocket?
See, for the entire 2018 calendar year, pricing issues were the main concerns for the market. While the volume growth was very, very strong, the pricing was not coming through. That situation has changed quite considerably during 2019, and while off late we have seen some issues in terms of the volume growth sustaining those high teen levels, but overall pricing power has come back to the industry, and we have to wait and see whether in a lower demand scenario this pricing power will continue. But as far as April to June quarter results are concerned for cement companies, most of the companies in the sector would obviously announce very good results in our opinion. We'll have to wait and see how this particular quarter and the next few quarters shape up in terms of the volume growth. But as far as we are concerned, we are playing cement for a multi-year cycle, and we believe that since the new capacity additions are far and infrequent, we will continue to see operating rates going up. So there will be quarterly movements, there will be regional mismatches, all that. But overall, from a longer term perspective, we believe that both volume growth and pricing power will continue to be in favor of some of the large players in the industry, and those would be the ones where wealth will get created over the medium to long term.
All right. Harsha, so far, the defensives have played out okay. I mean, they've conserved capital. I'm talking about IT in particular. The currency at 69, it's been perched there for some time now. There's not been much of volatility even with regards to the currency. We've seen what Infosys and TCS have done, and many of the other larger IT companies. What's the sense with regards to growth on the operational front? And while we're talking mainly about those low single-digit, the high single-digit growth numbers, do you see that even though we're not seeing very exceptional growth numbers, that is still a pocket to be in?
True, but I don't think as a sector it will be an overweight sector for us because we still see that from a valuation perspective, many of the mid caps in the IT sector are at a higher level, which may not be sustained given that there is no tailwind for the margins or for the business in general. So you have to be stock specific in terms of picking likely winners from this pocket is what we think.
Okay. The other one that, since you already spoke about cement, I want to dwell a little more on the commodity side. Will you be looking at metals in a different light now? We've seen, there has been some amount of pickup in pricing. But the overall cyclicality of it is something that probably keeps investors away. Would you see things changing now materially for metals?
Currently, we are maintaining underweight position in metals because there are too many moving parts. One, global demand has been in question. It's been getting moderated in every quarter. And if you look at US-China trade policy, there are question marks in terms of tariffs and how it's going to impact overall global demand and supply in terms of commodities. So, and most of the commodity players in India also have high leverage on their books. So to that extent, I think while there may be value at this point of time, it's very difficult to take a large bet on that particular pocket, given where the overall global economy is and where our liquidity scenario is. So we are maintaining underweight stance on metals.
Let's talk about autos now, the big pain point that's been there for some time now. Despite some managements coming out and giving commentary with regards to August being a turnaround, it doesn't look so. The prep towards moving towards August is not really worked out as planned. Would you believe that the pain would last a little longer than anticipated now?
Definitely, we believe that this festive season is unlikely to be a great one because there is inventory at most of the manufacturers' side. And also we have done several channel checks with distributors spanning passenger cars, two-wheelers and other automobile segments. And everywhere there is more inventory than what manufacturers are holding at this point of time. So to that extent, I think inventory correction is going to take time, and we don't see a sharp V-shaped recovery in this particular segment.
Okay, Harsha, one final question from my end really. When we look across the spectrum, the pockets that have corrected the most, in addition to autos, are some of the slightly sketchy quality NBFCs. Now, we've spoken about the large banks, we've spoken about the mid-sized banking space as well. Would the same hold true for the financing companies, because they are showing some chinks in the armor, but the correction in the prices has been quite dramatic? Would you go out shopping in that space, or are you leaving it completely alone?
No, we are not looking to add to our NBFC exposure. We have very few names where there has been no funding constraint, the asset qualities have been stable, and there has been no asset liability mismatch in their books. So those are the NBFCs that we are holding today, and even with the fall in prices, we are not really looking at taking some bets in NBFC segment other than what we are holding.
All right. Harsha, great chatting with you. Thank you so much for joining us this morning. Appreciate you taking out the time.
Thank you so much.
All right, the markets are up and about, so not bad going at all. For the Nifty 50, up about 0.5%. Banks are contributing well, so the start is good. Let's see what the end shapes up and how the day shapes up, rather.
Yeah, really, that's been that bit of a problem, isn't it? But anyways, take a break. Let's hope the green lasts from a bull's perspective. Up next, on the other side of the break, we speak about the 4 million ton buffer stock that the government is looking to create this year. Avinash Sharma of ISMA would be joining in. Decode the earnings with Vivedanathan of IDFC First Bank and Mrityunjay Mahapatra of Syndicate Bank.